Welcome to Moneycontrol. You have tuned into Earnings Express, and today we are here to talk about Protean eGov Technologies. The stock has taken tumble, almost lost in 12-13% in the last two trading sessions after reporting in the numbers. The company's consolidated net profit has declined by as much as 46% for the quarter gone by. The sales for the quarter, however, risen by 16% to 203 odd crore for the quarter ended December 2023. As against the number of 175 crore during the corresponding quarter. But to know more about the outlook and the financials, we're getting in conversation with the company's Managing Director and CEO, Mr. Suresh Sethi. Hello there.
Hi, Nikki. Good morning.
Well, afternoon there. How do you look at the revenue growth profile per se? It's slowed down to 16% in quarter three. After 36% growth that we've seen in the first half of the financial year, how is Q4 likely to stack up?
So, Nikki, this is a seasonal impact because if you look at a year on year, we maintain the strong trajectory. Because looking at the 9 months ended December 23, our growth year on year is 29% overall. And if I look at the individual businesses, the tax business has grown by 29%, pension by 14%. And identity has really done extremely well. It's grown by 68% over last year, same period. So we are seeing a good growth trajectory. Third quarter generally is seasonal, and the larger seasonal impact comes from the taxation business, which is contributed to by the PAN issuance business. So we do see a little bit of slowdown in the third quarter, but historically it picks up in the fourth quarter. But overall, compared to last year, we are on a good growth trajectory.
All right. So what kind of growth rate can one expect by the end of the financial year?
So generally it picks up. I will not at this stage like to put a number to it, but historically always the fourth quarter is the stronger quarter for us. The third quarter is always a dip.
Okay. The reason why I was, this is one-off, and we've seen some amount of perhaps losses also creeping into the stock after we've seen that amount of downtick which has come through. That's exactly the reason why I was asking you this question. Also, in terms of your revenue profile for 2023, the company registered the growth of around 742 odd crore. Do you think a 20-25% growth is doable?
I think we are on a good trajectory. If I look at the numbers as of date for the year, we are 29%. So I don't see that, getting in any way challenged because we are on a good trajectory to that extent. Because the top line is already showing for the first 9 months a growth of 29%. Okay,
so a clear 35% uptick is what we can look at by the end of the financial year. Given that Q3 is already a seasonally weak quarter for you, you think
Absolutely.
You'll be able to scale up by 35% by the end of the financial year?
So Nikki, again, the last year's quarter four would also have been stronger and then the third quarter. So I would rather put my, specificity around the numbers which we've already achieved. But we are on a good growth trajectory. As you're aware, most of our businesses are transactional and annuity in nature. So there are no one-time deals which make it go up or down. So a good growth trajectory continues to be maintained. This year, the PAN issuance numbers have been 40% higher than what they were last year at this point. Likewise, in the other two businesses, as I mentioned, identity is almost 68% year-on-year growth. And our business is very, very granular to that extent because these are all the identity services that we provide to the B2B customers for digital onboarding, for opening of accounts, for digital lending. And that is a very distributed business, and it complements the Digital India growth story. And we do see the tailwinds coming, and it's a good story till now. And we see the momentum growing for the rest of the year.
But you said that the last year Q4 was equally stronger. So what makes you feel that this quarter, the ongoing quarter four, will be a little weaker as compared to what has been registered in the corresponding quarter of the previous year? Just talking about the revenue growth.
Yeah. I'm saying when you are comparing and saying, will we hit a 35% versus where we are at 29%, I was comparing to say that last year, quarter four would also have been stronger than third. So currently the trajectory is 29, and it will definitely, move along those lines. But the underlying drivers continue to be steady, and we see growth over there.
Okay, do you think, I asked this question typically even in at the time of your initial public offering, whether the company would be able to outperform a revenue CAGR of just 11%, which was clocked between FY21 to 23. Do you continue to see that, or do you think you can outperform that revenue growth number now?
We are looking at a good trajectory because the numbers in hand are the best thing to talk about. So clearly, as you can see, the company is looking at a 29% growth as of date, and this momentum should continue.
You've recorded a net credit loss of 70 million, receivable rupees 250 million recorded in ECL, offset by payable of 150 million in other income during the quarter. Can you explain this?
So these are some of the long-term debts that we are carrying, and we are naturally following a very prudent and conservative accounting policy. So as part of that, we've recorded this. Same period last year, we had around 3.5 CR or 35 million. This time it's around 70 million. So it is part of that conservative accounting policy, and you see the impact in this quarter coming through that.
Okay. Can the same be expected even in this quarter, any of the one-offs?
So there could be some impact.
To an extent of what?
So currently we'll have to see at the end of the quarter, because these are long-term debts. If we do receive some of the money, then accordingly we'll have to work the books out. But otherwise, it is more in line with those. And this is largely for us debt which is coming from some of our work we do with the government. And clearly we do receive the payments, but they are delayed. So that is really, we need to take conservative policies in place and make sure that we provision against those.
Anything in pipeline with regards to those policies? Right now, government ordering, I think it's just to an extent of 15% of your overall revenue. How much is that number changed now?
No, it hasn't. It hasn't. Our actual payments from government continue to be sub 15 or even lower at this stage. And this is more long-term accumulated debt which is there. And that is where we are addressing the same.
What's your debt right now? How much has this come down to, and what can we expect going forward?
So these are actually, debts which are sitting over 5 to 6 years. And that is what we keep having a ECL policy, which according to it, we have provisioning done at certain periods of time as the debt ages. And that is what flows into these numbers as we see them happening in this quarter or any other quarter.
Okay. All right. Let's also talk about your split for the 9-month ended. Tax services contributed to 56%. Pension services contributed to 28% of your revenue. And identity services contributed to 12% of your revenue. How are you looking at that? How can this evolve over a period of time, if at all? And which of the following business is more margin accretive in nature?
So we see this trend definitely continuing. As I mentioned to you, the company has invested over the last 3-4 years into a strong diversification strategy. From these 3 primary lines of business, we are actually moving into 7 lines of business. Our extended businesses clearly is one on the front of data, where on the core identity stack, the business you see over here, which is contributing 12%. We've this quarter also launched 2 very important, products. One is complete AI-driven KYC capability, and secondly, Protean Rise, which is our API marketplace, where we are providing almost 300 APIs to do a full stack capability for digital onboarding, credit monitoring, and so on and so forth. So there we are doing a vertical integration, which gives us the ability to move up the value chain into B2B services. So data extended services, including our account aggregator license, is a growth area we see. Likewise, we are contributing into open digital ecosystems. The last quarter, we moved into one more DPI in the space of education and skilling. So that took us beyond ONDC, which is covering digital commerce, open finance, and mobility. We are already there in agriculture and health. Skilling and education becomes the latest ones. And the last is our infrastructure play, where we are powering enterprises with cloud and infosec services. And last but not least is our international foray. So these are the areas we are extending into. So while these 3 continue to remain strong, we see diversification leading and these other emerging businesses picking up and contributing to the overall top line going forward.
Okay, your margins have also contracted from 25% in Q3 FY23 to 15 odd percent in the current quarter of the financial year. What is the sustainable growth rate that now one can look at?
So, Nikki, one of the reasons for the contraction in margins has been because of one is the seasonal impact, but that naturally is not so much margin related. The other part is that we today are also investing in resources and tech to support the new businesses. As I had earlier shared, we are getting into sector specialization, specialists coming in on the people side. And secondly, we are investing in tech where we have created centers of excellence, especially on open source technologies, on other emerging technologies like AI, like blockchain. And that is where some of the investments have come. And so therefore, there's a rise in the employee benefit expenses on one side, and there's a rise on the tech expenses on the other. Now, a lot of these investments are done. We don't expect a similar, growth quarter on quarter. But yes, that is contributing, and that is showing the compression in margins as a result of higher expenses, which are funding or ahead of time investments into the new lines of business.
For FY23, the margin stood at 16%. Can we expect a number which is northward to 20% by the end of the financial year?
So it should, because as I said, these are not step functions anymore. So a lot of investment is done. And as new businesses also kick in and start giving an ROI, which is, as I call them, the emerging businesses. So as we see growth in them, some of this will get covered from there.
So we are looking at a number which is plus than 20%, right?
So it should move up, absolutely.
Okay, all right. During the IPO, the company has also stated that it is expanding its presence in various sectors of the economy, including digital commerce, agriculture, health, education, and account aggregation. It also planned to launch a business in the space of cloud and infosec services. What's the update there?
So one, I would say, if you look at the ODEs, which is the first part that you called out, where we talk about digital commerce, mobility. So as you see, digital commerce and mobility is housed under the ONDC ecosystem, where we are both talking about, buyer-seller discovery capability, where in a manner the company is invested in providing the foundational tech on which this network runs. So that is one area where naturally, as ONDC grows, we will be participating in the growth of the overall network. Interestingly, just to share with you it, I would say out of the new ODEs, that is one of the more mature ODEs because of the, the time which has elapsed since we started that. And secondly, naturally, we are seeing great traction on ONDC. There was almost a 67% growth between September and December. And the network is almost now in Jan doing almost 6.5 million orders have gone on the network. Again, the network participants, the buyer applications, the seller applications are growing. And likewise, mobility has moved beyond Bangalore into other cities. So ONDC is clearly something we see growth in. And as I mentioned earlier, there we are participating more at the foundational level. And also we are contributing into building buyer and supplier tech, which largely means enabling the buyer platforms, the supplier platforms. And similarly, over there, we've tied up with multinational banks. We have two partnerships currently running with Citi and HSBC to enable their merchants on ONDC. So we are seeing good growth over there. And in other areas, clearly the other area was agri for us, where we are working with the central government on building the foundational core agri stack. Likewise, there are assets running on the health side. And as I said, education and skilling is something which we set in motion in the last quarter, where again we are playing a role at the foundational level. And we are also bringing in our educational finance assets like Vidya Sarthi onto it, so that we can also act as a network participant to enable education financing on an open network. So these are some of the areas which are growing. So this is more about ODEs. The other one you spoke about was cloud. Again, emerging for us, but the good news is we got our METI certification in the last quarter. As a result of it, now we can also participate in government initiatives where we can look at government projects to come in. We do have traction on the business. Hope to see it going forward, getting more momentum. And other than that, data was the one where I already spoke about. We've launched new API marketplace, and we've also launched AI-powered CKYC product over there. And account aggregator is very much an intrinsic part of it. Account aggregator ecosystem, as you see, is also expanding. And month on month, there have been more transactions on it. And from our perspective, we are now live with almost 31 FIPs and likewise with multiple FIUs, the financial information user entities. And we are onboarding customers, and we've got customers onboarding who are using Protean Suraksha as a handle to enable data to be transferred from the providing to the user agencies to enable various use cases like personal finance management or loans or lending. And that is again, traction is coming on that. So that is largely a summary of the new businesses and how they are performing.
And what happens to the launch in the space of cloud and InfoSec services?
So on that one, Nikki, as I said, the big news for us was the METI certification in the last quarter, which gives us ability to now participate in government mandates also. Other than that, in that space, we are almost dealing now with more than 25 customers who are already onto our Protean cloud platform. And we are naturally, for us, the focus was one, working with the government and enabling our infrastructure, capabilities out there. And secondly, was to pick up, stake in the middle market, the small businesses, the startups, and see how we can use that as a segmented strategy of acquisition.
Okay, the final question I have for you also spoke about the incremental revenue growth and scalability from ONDC. Could you put a number for that for the quarter and, of course, the prospects going forward?
So difficult to put a number, and I'll tell you why. As I said earlier, we are participating both at the infrastructure level, which means as the entire network grows and the number of transactions increase on the ONDC network, we stand to gain as a infrastructure level service provider. And then is all the B2B and the equation with the buyers and the sellers. The good news is ONDC transactions themselves grew by 67%, which is a very healthy number between September to December. And more market participants are coming. So it is something which will get built with the network effect. We clearly see it heading towards an inflection point, and we remain sort of very positively enthused with the sort of participants who are coming in, the various market participants who are seeing value in the system. And it's an expanding system with big names coming in, the enablement of the small kirana at the last mile, where we are running some projects on the ground for digital enablement of micro, undigitized and underserved communities. So it's I would say a juggernaut which is rolling. Let's see how it plays out.
All right, gentlemen, I'm just going to leave it at that. And thank you so much for taking out the time and having this conversation here with us.
Thank you so much, Nikki. Have a good day.
You too. Well, indeed, this was the management of the company. Some amount of weakness perhaps felt in the top line performance of the company, but pretty much seasonal in nature, as they call it. Q4 is expected to be stronger as compared to Q3. They're expecting a growth which is northward to 35%. A bit of development when it comes to the segment and new launches. But with this, it's a wrap and goodbye from the team.